always hard. It's always hard.
Yes. Okay, let's start. So warm welcome to Boards Impact Forum's webinar, the first one of 2022 on environmental, social and governance requirements and impact on boards. So Boards Impact Forum is part of the Climate Governance Initiative, which is in collaboration with World Economic Forum. And our key objective is to engage board directors to accelerate climate action and innovation for a sustainable business. And today we will have a short introduction by myself and soon of our operations director, Cecilia Widerbeck-West. We will listen to ESG trends and regulations and investor expectations. And then we will have reflections from our panelists, and we will have a moderated discussion with our panel, and then we will go on to a conclusion. And next, you're all very welcome to share on social media with these hashtags. You can put your questions in the Q&A and I will help handle that. And my name is Liselott Engstam. I'm the chair of Boards Impact Forum. You're all very welcome to join us either as member if you're a board member, or as a supporter if you are just interested in following our communication. We run webinars and partner events. We have a website which is quite starting to be quite good with content. We will from February start with peer group exchanges, and we will run a digital education program, and it's all related to the 8 climate governance principles that World Economic Forum have published, that we find a very good way of guiding board members to increase their engagement on this topic. So over to Operations Director Cecilia Widerbeck-West.
And welcome again to this webinar on environmental, social and governance requirements and impact on boards. And before we move to the speakers, I would like to talk about you, the audience, because of the ones, we have 39 countries represented, which I think is fantastic. 75% of you are Nordic and 25% from the rest of the world. So welcome to all of you. And let me now introduce our first presenter, Jane Tostrup. Jane is the Deputy Director of We Mean Business Coalition at Zero Finance, and also a member of the Nasdaq Sustainable Financing Nordic Advisory Board. Jane has a long background from large listed companies such as A.P. Møller-Mærsk and Ørsted, and now her focus is to work with primarily corporates to ensure a better and more reliable financial and non-financial information to investors, and how investors then can use that data in a good way. Please, Jane.
Thank you so much. Next slide. I will briefly touch upon it. It's very short, but I will briefly touch upon these 3 agenda items. The first one is the ESG news and trends. This will be very much related to new legislation that we either have or can foresee we will get. Then I will talk about what is it actually investors need and what do they use it for. And then finally, tips and tricks. So if we look into the legislation part, we could see already in 21 that there are many activities going on, and I can easily understand if it's a bit overwhelming. So I would like to highlight some of the things that are very, very important to be aware about. The first thing is the ISSB. ISSB will be the new sister of IFRS. They were constituted at the COP26, and they will disclose their first standards by mid-22. That is enormously important. So this will be the global standard for the entire Earth. On top of this, we also have European standards. And right now, from 1st of January 22, there is the EU Taxonomy. I will talk more about the taxonomy in a moment, which is to apply now. And then we will also see the EU CSRD, which will hit us in 23. The last thing I will highlight is something called European Single Access Point, which is enormously important, especially for retail investors, for instance. That will be a new database of ESG data. And all companies likely will be of a certain size, probably all CSRD applying data will be into this European Single Access Points. It will be XBRL based, just like the financial reporting is today. Next slide. The EU taxonomy, I sincerely hope that most of you have heard about, because it is actually alive now. But just in case you have not, the EU taxonomy is a classification system that will outline what constitutes or what is considered a green activity. And for all large financial companies, they are to report on green asset ratios or green investment ratios. And all non-financial companies, large ones, they are to report on their green revenue, green OPEX, and green Kpis. And they are to do that for the reporting year 21. So, and here in 22, we have 6 environmental objectives within the taxonomy. And the first 2 objectives here will be in live from now, and next year in 23, the last 4 will be live. So right now we are very much focused on climate change and climate change adaptation and mitigation and reporting on that. And next year we will reporting on especially water, circular economy, and other things. What I would like to stress here is that there is absolutely no obligation for companies to be taxonomy aligned. And there is neither any obligation for investors to be taxonomy aligned. What is an obligation is that you report accordingly, because those who would like to be aligned then can either do peer reviews from if you are a non-financial company, and the financial institutions, they can aggregate to portfolio level. So that's the intention. Next slide. I know this is overwhelming. It is for many, many people. And there are also a range of other things that you could consider here. It's really overwhelming. And you might ask, why do we see all these initiatives now? And it is most likely because the sustainability reports / CSR / ESG reports tend to look like this. But the investors, they don't use and consume and digest information like that. They would really like it to be like this. So for that reason, we see all these initiatives now so that we can actually make sure that the capital is provided where we can see some green initiatives. Next slide. So you may ask, how do investors actually use the ESG reporting as it currently stands? What we see is that most institutional investors do use ESG in some shape or form. We also still primarily see that they use it for screening. Screening is when an ESG rater has digested all the reports and put in some rating of or ranking of companies. How well are they performing within the ESG sphere? And you can either screen positive, that means that you choose from the highest shelf, or you screen negative, and that means you're not allowed to buy shares below the floor. It is very often the negative screening that is risk avoidance, and it's very often used if you are an asset owner and you have an external asset manager, then it is fairly easy to say that you are not allowed to buy anything below this floor. We do also know that negative screening often is expensive, and we can see it, it can be expensive, especially on products. But what we also see, and this is very important, is that conduct screening. That means if the company is corrupt or they have slaves or something, then it's actually a profitable idea to get rid of those. So make negative screening, it's a dual thing, but the net is usually negative. What we see is the positive screening. That means that you choose from the highest shelf has a small positive effect. But what we see, and this is super interesting, is that the biggest opportunities we see right now is if you are able to use the raw data directly from the companies. And that means that you are able to actually make analysis of the data, the development of the data. You can find companies which are not totally green yet, but are on their way. And you can imagine that that is what the investors really would like, because this is where they will find pockets of growth. This is where they find the hidden gems. And that is what they would like to do. And that is also why they would like to see the data. Next slide. So for you to be found by the investors, it is of course important that you report in really good way and that the data is really useful and of good quality. And I have 3 tips and tricks for both the boards and the companies on how you can do that. And it will actually, in the long run, also make it cheaper for you to get audit of your ESG data if you take some of these tips. The first one is that you extend the internal control setup that you have currently for your financial controls, and do that also for your ESG data. You have to have controls for your ESG data in the exact same way. And that should also be reported to the audit committee. It is really, really good, because that will force the entire organization to make sure that there is evidences / likelihood calculations for all the data, so that you're sure that this can actually stand an external assurance. And I will also say that it will be heavily important for you to start to have external assurance if you don't have it today, because it will come with the CSRD. So if you don't have it today, please start with limited level. There are 2 levels, limited level and reasonable level of assurance. Then start with limited level and then go to reasonable level. And some also ask me, would it then be helpful if we use the same or a different auditor company compared to our financial? It will be helpful for you to use the same auditor company, because you would like there is coherence between your financial data and your ESG data. And that means if you, for instance, have said that you want to have net zero and then some random date of that, then that is actually an external commitment. And that external commitment should probably be reflected in your impairments of your assets, in your provisions, in your contingent liabilities. So it will impact on your financial data. For sure it will, at least in the consideration of your balance sheet. So it's quite important that the auditor company has this coherence view on things. The last thing I will say is reuse and extend the existing financial consolidation system. You do not need to go out and buy new systems. Use the one you have. And the good thing about doing that is that you ensure actually that you can compare the data. As you can imagine, you will consolidate it the exact same way. You don't have to have 2 ownership trees or stuff. You use the same. And therefore, you will also internally in your company be able to explain the data far, far better. So this is a cheap way of doing it, but it's much, much better than buying new ones, because then you will have to maintain 2 ownership trees and stuff. And that might take a long time. Next slide. The last thing I will say is that a couple of years ago, 3 NASDAQ and the CFAs and the Danish auditors, I would say, made this very short guide on what are the key figures to report on. And if you are still unsure what you need to report on, then I would say this is actually a very good one, because here we have considered KPIs that hold predictive value. That means that they can say something about the future of a company. That is quite important. So if you, for instance, look at some of the social data, that could be, for instance, employee turnover ratio. That is important for the investor, because if you as a company stand up and say, we will expand we will do this and that on a Capital Markets Day or at the AGM. Super. But then you can see that when you make peer reviews, that this company is not very good at holding on to people. They actually run out the door faster than fast. Then likelihood is you will not be able to expand because you cannot hold on to your people. So these data sets have predictive value within them. This is important. So it is also important that these 5 quality principles are kept, because otherwise the data is really not easy to work with for investors and analysts. So this is important. And in this guide, there is actually formulas. So you don't have to invent the wheel again. You can find everything in there. So both the principles and the formulas. And I should also mention that we will relaunch it now here. I think it will be end January with the new IPCC converter sets. So it will be updated. So so hopefully that will also be helpful for you. And we actually see now that that several companies have taken up this note and use it simply in their financial report as a standard note, right next to the balance sheet, right next to the cash flow, because it's easy for them to do it this way. That was it.
Thank you so much, Jane. A lot to consider, and there are a number of really good tips and tricks. Just before we move on, we've gotten a question in the chat on what size companies that need to report now. Do you think you could please add that?
Yes, those who are to report right now are the companies larger than 500 FTEs. And then there are some financials, I can't remember the on the balance sheet and revenue, but it's those larger than 500 FTEs that is usually what will happen with the CSRD. As it stands right now, it's not defined yet, but how it stands right now is that it will actually be all the way down to 250 FTEs, full-time equivalents. So it will actually hit far many more companies, the CSRD, the EU CSRD from 23. So it will be important for many, many companies.
Thank you so much, Jane.
Cecilia, can I just comment quickly, because we keep getting questions. You will get the slides, and we will make it available through the through our website. So that's one thing, and you will also get a newsletter on the blog. In that, you will get all references to all sources that was just referred to. So you will get that information. If you have questions, please put them in the Q&A box. Thank you.
Thank you so much, Liselott. And before we move on to the panel, we would like to ask for your perspective, and we will launch a poll with 2 questions. The first one, board's engagement in ESG reporting and transition plan. Do our board work actively with the company's sustainability and ESG reporting? Please choose one from fully disagree to agree. And the second one is, our board has decided on a plan for the company's sustainability transition. Again, please choose one. And while this poll will be up there, I will move on and present the rest of the panelists. Thank you. And I am so pleased to have 3 esteemed people to join our discussion. Christine Enström. Christine is leading the advisory of business at FCG, and FCG is compliance, risk and governance firm in Northern Europe. Christine works primarily with the financial services sector and has a long background in that area herself as a chief legal counsel, chief operating officer and interim CEO. Welcome, Christine. And Harri-Pekka Kaukonen is a professional board member, and he's also the chair of a number of companies such as YIT and the Lindström Group, and a director at Tieto Every, where you also work with the audit committee. and has a long background from industry with companies such as Sanoma and Fazer, as well as consulting as a former principal at McKinsey. And then Svante Forsberg, another professional board member. And Svante is the chair of Swedish Academy of Board Directors, a board member at Lannebo Funds and Self-Regulation in Sweden, and has a long background from primarily Deloitte in Sweden as a partner and chair, and also the former chair of the Swedish Institute of Chartered Accountants. So please welcome all of you. And I'm going to ask Christine first to provide some reflections related to the financial services industry. And what are your reflections as these developments go and the ESG and ESG requirements? Thank you.
Thank you, Cecilia, for the introduction. It's really so much to talk about when it comes to ESG and the financial services. And why is that? It's of course obvious that many of the initiatives in terms of regulations and disclosures comes from understanding and visualizing and reporting on and redirecting the financial flows, so to more sustainable initiatives. And obviously the financial services plays a very important role there. Having spent quite some years in the financial services, I can see a clear shift of ESG becoming more core to the financial services, moving a bit, to express this a bit blunt, from the marketing and communications department to the business areas, and also risk management. Obviously, the financial services struggle a lot with the reporting and disclosure requirements. And it's a bit, in a sense, backwards, because reporting used to be reporting on what you have done. But with ESG, it's a bit the reporting that will force the financial services to actually take actions. But in terms of being more practical and oriented to what should you actually do, it's maybe not the reporting that will give the answers to the industry. And in a sense, I feel that the ESG area is a bit of a dark cloud hanging over the executives in the financial services. It's a bit new legislation, and it definitely does not come with manuals and metrics. The European Banking Authority, called EBA, has made a report last year about supervision and risk management in the ESG area. And they report on some interesting areas which they have seen in their supervisions naturally. And I think it's interesting because it's interesting for each of us in the financial services sitting in board, but also outside of the financial services to reflect on. What they have seen, they say, is it's a lack of strategic ownership of the ESG risks and the ESG agenda. It's a shortage of knowledge and skills around ESG and ESG risks. It's a lack of efficient third-party management, meaning collecting data from customers and counterparties. And ESG factors is also not sufficiently integrated into company culture. I think we can all bring those topics and reflect upon them and look into our own companies. How far have we come? Do we have a strategic ownership of the ESG agenda? Do we have the sufficient knowledge and skills in place? Are we handling third-party risks in a efficient manner? And how do we fit into ESG into the company culture? Interestingly, EBA also reports in the same report that three interesting topics. You have to adapt ESG more thoroughly into the business strategy, and also taking on a longer, preferably 10-year horizon on strategic planning. And ESG also needs to be thoroughly integrated into the governance system, all the way from ESG being on the agenda of the board, having the adequate committees, and also having the perfect organization within the institution. And last but not least, risk management. That is obviously the core of the financial services, packaging and selling financial risks. So it's a clear expectation on all the financial services to bring also ESG into the risk management system, to include it in the risk universe and to understand how ESG risk is transforming into financial risks. So with all that, you have obviously to slice the elephant. If you're any company, even if you're not in financial services, you have to slice the elephant in order to take on the challenge. And if to say something, I would recommend to start small and hands-on and to bring down the dark ESG cloud to meaningful action for each of your activities.
Thank you so much, Christine. A lot of to think about, and I think we're all clear that the financial services, as well as other corporates, have a lot of work to do. But so I really appreciate your advice there on starting somewhere and starting small and then move on. We will get back to you, but now I would like to move on to Harri-Pekka. And as a professional board member, I'm curious to find out how you see these requirements and the current status among corporates. Please.
Yes, thank you, Cecilia. Also, from my behalf, glad to be here. I'd like to start with that first we need to understand that the intent of all these regulations is very good. So I think to keep that in mind when that sometimes as personally been overwhelmed, even frustrated with some of the requirements. And that's, I think, is a good starting point we need to understand. I think that it is a challenging process for a number of reasons, because on one hand, the aim and the target is that we'd have the same quality of reporting as we have with the financial reporting, and also the same quality of reporting to investors as we have in our normal IR reporting. And then, but the process is quite different. I mean, it's been launched because of the high pressure to get impact in this arena in a very rapid manner, and it's a little bit as figure out as we go. It's evolving quite rapidly. So, for example, the EU Taxonomy, this year we report on something which is not the full thing, and the next year we'll do it again, and most likely the numbers will be completely different. On one hand, you could say that there's no sense in that, and on the other hand, I guess it's a good practice round to then test the processes, and that is my second point, which make it challenging. Whereas all companies are very accustomed to financial data, and the systems and processes and structure and responsibilities are very well defined here. But here, it's not so. I mean, you have Jane's picture, with the flowers on the left side. So there are as many ways of doing it as there are companies, and there's kind of, at least in the company, the whole system and structure is still evolving, and that obviously is a challenge. And with that also the point about the quality of data. But I think the good news is that this is a temporary transitional stage. But I would like to say that at the end point, finance and IR will have a big part of it, and then ARC as a key owner of this. So I think things will settle, but I think mentally in the companies, you need to think through the right roles and responsibilities. And I think it's easy to guess where the end responsibility will lie and to take that into account. And then finally, I think the reporting is really good, but as Christine mentioned, it's a little bit reporting driving the action. And I think it's, if anything, then start from that end to really try to understand where the opportunities and risks are to you from a strategic point of view. And that is the main thing, at least in the companies I work with, what they're trying to get our arms around it. And it depends a lot on what type of company you're talking about. I mean, some companies happen to be, very green by chance or by design. So, for example, Lindström is in circular economy by definition. And then on the other hand, a construction company is kind of dealing with the biggest CO2 emissions in the life cycle, but from a process point of view are just starting. So the companies are in different starting points. So maybe those would be my reflections to start off with.
Thank you so much, Harri-Pekka. A lot to continue discussing, but I'd like to move on to Svante. And what is your view and your experience, and how do you think that the board assumes this responsibility as it is now?
Thank you, Cecilia, and thank you for being here. I think the board that I can oversee is that we take it very seriously. It's an important issue, and as Harri-Pekka says, it's the intention here is very good. On the other side, I think it's a lot of confusion now because how to start. And from my point of view, I think the most important thing is that the companies integrate ESG with business so that they don't live in separate lives. And what I should recommend is also that we start in the board with the ambition. What ambition do we have in these areas? And then, as Christine said, take it step by step. So but we would start with what is ambition. And also I think that there is another. I think Jane's tips and tricks are very important. You have to have build the backbone with when it comes to internal control. I think that second advice to have an external assurance taken step by step is also a very good advice. But where I come from, I was early involved in environmental reporting, and the problem in this area is the data quality, as some of you have already picked up on. And we don't have any experience in doing analysis and controlling of the figures in this non-reporting area. So there is a development phase, I think. So for me, it's the level of ambition, have a thorough stakeholder analysis. You can't satisfy all stakeholders. You have to really decide which are the most important stakeholders. And then to have a top-down approach, not bottom-up, because it's very easy to be very idealistic and start with we should do everything at the same time. I think start top-down and collaborate between companies. This is an area where you should not be competing. I think where you can collaborate, I think is a good idea as well. And the last thing, don't tell the truth. Don't be too optimistic when it comes to these areas. It's better to tell how it is and what roadmap you have for the future. Thank you.
Thank you so much. And with all of those really good reflections, I would like to just check on the poll result before we continue the discussion, and I wonder if Liselott can show it. When it comes to how active the board is on working with the reporting, it seems like a majority, you're involved, but not completely. So I guess there's more work to do, but still there is a bit when it comes to that. And then when it comes to if you have decided the plan for transition, again, it's 16% have definitely do not agree. They have not started, but approximately half seems to have started. And I think that is a good reflection. Thank you, Liselott. And any comments on this? Harri-Pekka, what do you think? Are you surprised by the poll, or?
No, not really. I think it probably reflects a lot on the starting points of the companies, and it is my experience that everybody understands that this is important and has started to work on the topics. But I think that the bar, at least for me, of being able to say that this is fully integrated strategically into it. It's a little bit like digitalization, I would say. When it started, like people understood it, and then you start nibbling with it and try to understand what it means, and then you launch different initiatives and things, and it takes a certain time and maturity before it becomes integral. So not surprised at all. And then on top of that, the whole confusing changing reporting landscape, which makes it very tricky. So I think it's kind of digitalization plus strategic challenge, because it has the reporting, additional challenge on top of it.
Thank you. Svante, you wanted to add something?
Yes, I totally agree with Harry-Pekka. It reminds about digitalization. I think these both areas, both ESG and digitalization, I think it's a question for the CEO to handle that, to really to take the grip on it, not to appoint is the officer or whatever. I think it's very important. You could have of course have people working with it, but the CEO should not delegate this responsibility to down to low in the organization if you're going to have a really change.
Thank you. Christine, would you like to add something?
Yeah, I'm thinking about that it's interesting to see that maybe more companies are occupied with working with the reporting than the actual plan for the sustainability transition. And obviously it would be more natural to do the other way around in a sense. So that's maybe one reflection from me.
Yes, there's definitely the risk of that when it comes to that. So then you sort of move on. If you're then the director of a board that needs to work with this, what questions do you ask the CEO and the management as regards the ESG reporting? Harry-Pekka, would you like to elaborate?
Yeah, I think there I would like to build on Christine's point, is that at least I'm sort of, if I'm in the role of chair, I think we're, at least in the companies, the bigger ones where I'm at, we're a level of maturity that I can assume that the ARC, for example, takes care of the compliance with the CFO and the organization. So I think the focus is more on do we really have understood the strategic implications of ESG? And try to get a structured discussion around it. And honestly, I mean, I can't say that we have sort of an integrated view. So you need a kind of an extra kick in the pants to really go deeper in certain specific topics. And I think that's the process we're at. And then it varies, depends on the company, how far one is going, and also where the emphasis, whether it's on the E or the S or G, that also varies by company quite a lot. So it's not just kind of one thing. Thank you.
Svante, you wanted to add something there?
Yeah, I want to add, go back to again to, I think it's very important to discuss the ambition. What ambition do we have strategically on this and to our brand and so on. And also I think the board needs education here. I think important to I mean, if we are working in the financial industry, we have education every year in our board work, and I think this should also be on the board work, to have education and discussion, little bit workshops and so on, so we really understand the implications and the journey we should have, and maybe setting up bold goals and objectives.
Thank you. Definitely for thought. Liselott, I understand that we have some questions from the audience.
Yes, super good questions. So I'll give them both and you can decide which you answer on. The first one is, what is your thoughts on these financial auditors? Do they actually have the capacity to understand and assess ESG data? And the second one is, if you're now trying to incentivize, and it's not just the management team, how do you incentivize the staff to take action in this ESG field? Do you include that in some performance-related reviews on the ESG progress?
Good. Anybody who would like to start thinking about the auditors? Svante, you have a background.
Maybe I can take the audit questions. I think in general, there is the last couple of years has been a development in the competence on these issues, and I think that in general, the auditing companies can do the work properly. I think it always matter of the definition, what is an audit, what is a review, and so on, different definitions. But definitely, I think that the audit firms can be also a good discussion partner, because I think this is not a financial audit. I think it's more a collaboration between the audit firm and the company here to come right.
Anybody else who wants to answer the questions from the audience?
Yeah, I would like to say also to what
Svante
just said. Yeah, what Svante just said. Actually, many of the KPIs that are to be reported on can be made likely via looking at the financial data. So if you, for instance, see CO2, either the things you burn off yourselves, that will be what is called scope 1. You will never get any fuels for free. You will always have invoices for that. So for that reason alone, actually the accounting can help you. Same goes for what is known as scope 2, that is CO2 from electricity and district heating and district cooling, if you have that. You always have to pay for that. You have invoices. So a good collaboration between the ESG people and the financial people is enormously important to get the data right.
Yeah, maybe I could add on the incentive side. I think I'm seeing a lot of activity on that front to try to incorporate some metrics into the incentive programs, the short-term incentives or even the longer-term incentive programs. And I think the challenge here is really around the data quality sometimes, because you wouldn't want to and then need to balance there's a cultural and signaling effect of launching these things, and then you have the the accounting credibility side of things. And I think at least some point you need to strike the right balance, so not to be overly conservative, but not creating something which is completely meaningless in terms of so examples, obviously CO2 emissions, as Jane mentioned, but also in terms of diversity and recruitment in one company where the war of talent is so trying to promote recruitment of female workers in that particular industry and so on. So I think and Jane showed that these things are measurable, so you can do it.
Yes. Changing slightly a bit to the financial industry again, Christine. Sorry, yes.
Can I just add some? I think I totally agree with what Harry-Pekka said about the KPIs, and I think a good starting point. But I think in this area, I think it will be more than in financial reporting. It will be different between different industries. So I think it will be more industry-specific KPIs that will be developed during the process here. So just a comment on that, because it's very different between as Harry-Pekka said, Lindström and other companies. So we have to bear in mind that it will be more industry specific.
Thank you very much. A really good clarification, and I think that many struggle with that if you have general ones, then you might miss the point. Sorry about that. Christine, the financial industry is now put in in the front seat. They need to do a lot of things. How far have they come in general? What's your view?
I think it depends a bit on in which area of the financial sector you work. But for instance, when it comes to asset management and insurance, as they have been hit by the disclosure regulations and been forced to live with that for almost 1 year now, they have been forced to take action pretty soon. So I would say that asset management, insurance industry, funds and also bigger banks, when you have portfolio management, they have been working a lot with this. And it's also probably the bigger you are as an institution, I see in general that you have been a higher maturity. But for instance, if you're a small bank, you don't, if you're not hit by the disclosure regulations, you generally have a bit more to do, and maybe you struggle with in which order to do it. So, but I think it's also clear for everyone in the financial services industry that it will also be attracting clients depending on how you work with it. So it's not just a burden, it's an opportunity. And customers will choose the front runners.
Thank you. Thank you very much. And talking about sort of the opportunities as well, how do you think the board should work on this to make sure that they're in the driving seat when it comes to the ESG, not just the reporting, but the agenda? Hari-Pekka?
Well, I think I at least tried to allude to that. I mean, this is a strategic CEO topic, right? So that's where I would start with. And you know, if you I'll take construction as an example, right? Just to make a point here. So this is an industry where housing constitutes more than 30% of the CO2 emissions during the life cycle of buildings. It's an industry where the track record in general in terms of work safety is average, not great. It's an industry where, at least in certain regions, you have quite big challenges in sort of compliance matters. It's an industry where sort of where you have lots of subcontractors and you know, managing how things are done across that value chain are important. So if you sort of think about if you could solve any one of these problems and create differentiation, that would be a huge advantage from a strategic point of view. So that is alone is an incentive, and then on top of you put in the consumer demand, for example, in housing, etc. So there's huge opportunities, but also a very difficult implementation challenge because of the complex value chain of getting things through. So just hopefully that makes it sort of concrete why. So it's not just reporting, it's a fundamental question for that industry. Yes,
thank you very much. And an illustration of how you can turn the difficulties into opportunities, obviously, if you can. So anybody else who would like to comment on this? I would otherwise like to ask Jane, what will investors do now when they see the reporting coming in? What do you expect?
Yeah, what do we expect? I think many investors are really having high hopes, especially for the ISSB, because likelihood is that we will have far more comparability, both across companies, but actually also from the financial data to the non-financial data, so that you actually can start making real integrated analysis of the company and the company's developments. So I think we will see a lot more of that, where they will start using the data. And right now, I also have some discussions in another forum where we talk about how can we actually see that also retail investors can start using this, because today it is actually very difficult if you're a retail investor to find all this information. And we see now that there will be a pressure also from all the trading platforms that they will have this kind of considerations at least. So many new things will happen, for sure. And now also on I think it was both Spencer and Christine said about there are different things that the company should report on. Actually, the ISSB have indicated that they will have a minimum requirement, a really slim set of KPIs, and then on top of it, there will be sector-specific KPIs. So it will be different per sector what should be reported on. So really, I think actually that is a good news.
Thank you so much. Svante, you wanted to comment there?
Yeah, just a reflection here on what Jane said. I hope that the investors don't always use negative screening. I think it's good not to have a dialogue with the companies and not to exclude companies. I think that is also sort of a reflection that I hope that the investors will do.
Thank you very much. Christine, what are the biggest challenges for the financial services industry at the moment when it comes to this reporting?
Oh, I think it's there are many challenges, but one is to understand what to report and when. That's number one. It's not so easy actually. And number two, I would say, is data management. Do we actually have the data that is required to report on? So that's number two. And then number three is kind of having the proper organization in place for doing the reporting.
Thank you. And that ties us into how the board also works with these issues and the involvement of the, the committees like the audit committees and other things. What do you see happening there in that area? Will you have to work differently, or what's changing there? Harri-Pekka, would you like to comment on that?
Yeah, I think this is, it seems like ARC is kind of the end point of all these different developments, and this will land quite naturally there. And I think it's the capabilities, the discussions, and at the end of the day, the process ownership and capabilities sit in the financial function and the ARC. So I think once we sort of sort out the process and data questions and the reporting, then it sits quite naturally in the ARC, and the ARCs are already getting a good hang of this. It will improve. I think in a couple of years we'll be in quite good shape, is my estimate on that. I think again, I'd repeat myself here the third time. I think the bigger question is how to get the whole board around these strategic topics, and it's, as the other panelists said, it's very industry and company specific. So there's no one rule. Starting and setting the ambition and the goals, understanding the overall lay of the land, and then getting a clear strategic picture and with ambition and all the stuff that follows from there on. So I think that's where I would spend more time if I were sitting in a board.
Thank you. And I think we could continue discussing this for a long time. And the big question, of course, is how do you get then the full board to work on these issues on a regular basis? So I would like to ask each one of you to provide your recommendation to the board. What should they do now, say within the next year? What actions should they take to move forward? Svante, would you like to start?
Thank you, Cecilia. My three advice is that start with the ambition discussion, level ambition. This is a strategic issue, and you should start where we want to be here, really. Then it's much easier to make a roadmap. The second thing is, I think the CEO should be in the driver's seat. Don't delegate it further down in the organization. And the third one is do a well done stakeholder analysis, and don't try to make all stakeholders satisfied.
Thank you. Christine, what is your recommendation?
So my recommendations are directed to boards in financial services, but it could be copied with pride to other board of directors as well. And the first recommendation is to make sure to establish an ESG or sustainability policy and connect it to your business strategy. My recommendation number 2 is to make sure to incorporate ESG risks into the risk management universe and to understand the ESG risks you're exposed to. Number 3, establish KRIs and KPIs that are meaningful to follow up on a board level with continuity, because that makes you come back to the question. And number 4, back to my elephant, slice the elephant, start small and hands-on, and do it and explain and disclose what you have done.
Thank you so much. Jane?
Yeah, thank you. I think I would say, I think really what we have heard so far is really good points, but I think I would say to the CFO, go and have a cup of coffee with your sustainability colleagues, because you need to co-work far, far better in the future. And this is also important for the risk department, because they will need to understand, for instance, what is the impact, the risk impact on the company and its ability to maintain values if they are hit by physical changes or transition rate changes from the climate, for instance. Could also be social changes, just like the pandemic we have just seen. So start having the dialogue, because we often see, unfortunately, that the ESG/sustainability department is somewhere out here living on their own planet, and that doesn't work.
Thank you, Jane. And Harry-Pekka?
Yep. So first, it's a business issue, so treat it as one, and that has a lot of implications. Then my second point is the same as Jane. So this will land in a similar structure as IR and financial reporting. So think through the roles and responsibilities and get the cooperation going, because you know what the end model is. So work backward from there. Then thirdly, use auditors. Their job is to understand all of this stuff. So they can be a very helpful source of giving you also where kind of the expected level is. So where's the benchmarking, so you don't kind of overdo things. And then finally, just a practical thing. I admit I was completely overwhelmed with all these different reporting requirements that are associated with the year-end reporting. I mean, you have all these different board reports and content there. So it was very helpful to ask management to put together a one-pager with all the different reports, and then what are the content topics that also include these ESG topics and the risks. And that sort of opens up, and then it's much easier to have the discussion and dialogue and keep the big picture in mind, and then use that as a map. So that I would recommend. At least helped me tremendously a few months ago.
Thank you so much. Very valuable recommendations. And unfortunately, I think we are soon running out of time. So I would like to really thank you for very inspiring and good discussions that I think a lot of food for thought. So thank you, Christine, Svante, Jane, and Harry-Pekka. And I also like to thank the audience, of course, for participating, as well as our partners, FCG, DLH Piper, Prime, the Swedish Academy of Board Directors, Board Network, Boardman, the Scandinavian Executive Institute, Sture Institute, and Directors Institute, Finland. Thank you so much. And Liselott will just show a little bit of what's happening next.
Yes, and we have a number of questions which is still not answered. We will try to get them into a blog post that we will add, that will also have the slides and the recordings from this. And we will continue the discussion. Two things that will happen now is that we're actually launching a digital learning journey that is open for anybody. One day each, you will get insights into the topics. First on the board, then strategy, then reporting, and then exchanges. So do follow that. In relation to that, we're launching peer group exchanges between board members, and it's member exclusive. So if you're a member, you will get an invite. Depending on how many it is, we might have to divide it into different, but the first starting, we will have 4 exchanges starting February 18. If you're also very interested in actually following more things, we do provide access to our international chapters, so to our colleagues, which have a lot of good and interesting and inspiring webinars, and you find them through our board site. So do check out our board, our website, and do join us so that you can be part of these exciting, a bit more deep dive. We will also come back, of course, with more webinars also from Boards Impact Forum. Thank you so much, Cecilia, all of our fantastic panelists, audience, and partners. Thank you and goodbye.
Thank you and stay safe.